Federal Reserve continues their tight monetary policy, putting pressure on equities, stressing bond markets, and increasing the burden of public and private debt. All the while, central banks around the world are buying gold in record amounts not seen in history. To help make sense of this present economic environment, we will hear from economist, White House advisor, and author Jim Rickards and geopolitical analyst Alasdair McLeod.
Uncertainty ahead of the event is obviously suppressing the price of gold and silver because the Keynesian and monetarist cohort think that safety is in the dollar. And we're seeing this with all the major currencies tanking against the dollar. It's not that the dollar is good, it's just the least worst of a bad bunch. And I think that, at some stage, when the crisis is actually more visible, you will suddenly see that people are actually going for gold and silver. We are already seeing this with withdrawals from COMEX. I mean, COMEX is not meant to be a market which provides physical stock. It's meant to be a market to trade around it. It's a combination, I think, of two things in the case of silver. On the one hand, you have industrial demand for it because it is such a valuable metal in this ESG world, where we're all trying to talk down fossil fuels and talk up, windmills and Lord knows what. That should not be underestimated as a driver behind the silver price. But the second thing is that there are people who do realize that silver is a monetary metal, and when the fiat currency is failing, you better have some. These are not sellers. These are hoarders. They're stackers, if you like. And we've got the same thing to a lesser extent in gold because gold does not have that industrial use. But nonetheless, the monetary side of gold is suddenly beginning to come into the fore, which is why you're seeing consistently huge amounts of gold running out of the door on the COMEX market. The main thing is that the demand is being triggered by increasing concerns in places like Germany, France, China, India, about the future of these, of the banking system, of the currencies, which they see falling. It makes an awful lot of sense to hoard some gold. They take on gold not to profit from it. Right. That is not what it's about. It's actually, at the end of the day, you want to have it so that when the currency goes, you've got something to spend with. That is the vital point. So we are at a bit of a crossroads here. And I would say that this is a wonderful opportunity. I mean, when you see the hedge funds selling down their contracts, going short of silver, gold contracts, whatever, simply because they're scared of rising interest rates and what that's going to do to spreads and all the rest of it. I mean, what a wonderful opportunity for people who actually genuinely understand economics.
Well, gold is money, and money's not supposed to have a cash flow. So take, reach in your wallet or your purse and pull out a dollar bill and hold it up with two hands and look at it. Does it have yield? No. But when you have money, at least a sound form of money, you don't have any risk. And so the idea that gold has no yield, well, that's literally true, but it's not supposed to have a yield because it's money. Now, you say, well, I can get yield on my dollars by putting them in the bank. That's true. And people think of it as money, but that's not money anymore. When you put your dollar in a bank, it's not money. It's a bank deposit, which is an unsecured liability of banks that as recently as 2008 and even later were completely insolvent. Now, yes, they were bailed out by the federal government, and there's FDIC insurance, and I understand that. But even if you're under the insured limit, how do you know the insurance deposit insurance corporation itself is solvent? That's not always true. How do you know that bank withdrawals won't be suspended or reduced as they were in Greece and Cyprus? And then people say, well, that would never happen in the United States. And I point out it did happen in the United States in 1933. There was an 8-day bank holiday. Banks were, by executive order of the President of the United States, banks were shut. The government did not say when they would reopen. Turned out they reopened 8 days later, but for 8 days you couldn't go down to the bank and get your money. People say, oh, I've got money in money market funds. Another misnomer or oxymoron, because the SEC recently issued a rule saying that money market funds can suspend redemption. So everyday Americans think that they can call up their broker, sell their money market fund units. The money will be wired to their account and it will be available to them the next day. Well, that's a nice, warm, cozy assumption, but none of those assumptions are necessarily true. First of all, money market funds were in the process of becoming illiquid in 2008, and the government stepped in to bail them out. Today, they're allowed to suspend redemptions just like a hedge fund, so they don't have to give you your money. And again, people say none of these things will happen, and I just point out they have all happened. So I don't recommend taking all your money out of the bank or selling all your stocks or cashing in everything and buying 100% gold. What I recommend is about 10% gold, 10% of your investable assets. Take about 10%, get gold. That's your insurance policies.
As the Federal Reserve props up the strength of the dollar with high interest rates, this lowers the price of gold. This is the opportunity. With the eventual Fed pivot and inevitable money printing, gold will rise. With a volatile stock market, a bond market that is on track to a historic third consecutive year of losses, the U.S. 10-year Treasury hitting 5% for the first time since 2007, just preceding the Great Financial Crisis, and massive deficit spending and government debt that will shackle present and future generations with inflation, it's never been a more important time to protect your retirement savings and purchasing power. If you are interested in protecting and preserving your wealth with physical precious metals such as gold and silver, whether in the form of private investments or a gold IRA, see the links in the video description to see the best gold IRA and precious metal investment companies that we have personally researched and vetted. Thank you for watching.